Joining me now to talk more about markets at the open is another one of our NYSE community resident experts, and that's senior market strategist for the stock exchange, Michael Reinking. Michael, great to have you on the show this morning.
Hi, good morning. Thanks for having me back.
Exciting day here at the exchange.
Yes, it is.
Hinge Health, a key IPO, Mountain celebrating its IPO as well. What does this tell us about the state of the market?
Yeah, look, there was high expectations coming into this year that you would really see capital markets start to open back up. Some of the volatility that we saw in Q1 slowed some of that process, but as we're seeing today, right, those capital markets are still there. Markets are receptive, to bring new IPOs to the market. And I think the other thing to take away is that the IPOs that we have seen, during Q1 and earlier this year, they've been performing really well in the secondary market, right? So it continues to show there is this demand, kind of for new companies, new innovative, kind of ideas and companies coming to the market.
Interesting. So today we see the market a little changed here at the open, at least, but the S&P 500 has had a very strong run back near to within, let's say, 5% from a record high. What is the state of play?
Yeah, so it's really interesting, right? So we had this over 20% rally off of the lows, kind of from the start of April. Last week the S&P 500 was up about 5%. Now we were also coming off of an options expiration. So Goldman Sachs had highlighted that it was one of the largest May options expiration cycles that we'd seen in history. Much of that was skewed to the call side, right? And what that did is help push markets a little bit higher, right? But it also compressed some of the volatility. So we were looking for a little bit of volatility to potentially be reintroduced this week. We've gotten that. It came from a source that we weren't necessarily expecting, really kind of that treasury market and volatility that we're seeing in sovereign debt markets.
Interesting. So tail end of earnings season. Most of these Q1 results holding up pretty well, but a bit backward looking. Any takeaways there?
Yeah, look, I think you framed it right, where coming into Q1, right, the environment was pretty strong. Companies have continued to show that is the case. Right, management teams have been kind of laying out kind of their playbook in terms of how they're trying to mitigate some of the potential costs related to tariffs, but they've done a good job, and you continue to see the consumers holding up, right? The economy's holding up. We're just kind of stuck in this period. We've started to talk about it as purgatory, right? Where we're in a little bit of a time period where we need to ultimately see what policy is going to look like, and then see how that is going to kind of impact the economic backdrop going forward.
Mm-hmm. And so how should our viewers navigate and view the market in that scenario?
Yeah, so and I think we're in for a choppy time period, kind of for the next couple months, right? We did get the passing of the big beautiful bill in the House this past weekend. It still needs to move, or this morning, it still needs to move through the Senate, and then we're going to have to mark that up, kind of between kind of the House and the Senate, and figure out kind of where the end game is. You have that, you have the debt ceiling, which kind of puts a real timestamp in terms of moving forward from there, and then we have the 90-day reprieve, also kind of falls in that mid-July time period, right? So we had this very significant de-risking. You've started to re-risk. I think we're in for a little bit of a period of kind of consolidation, right, and chop until we start to get a better sense of where things are. Coming out of that kind of purgatory time frame, we've seen management teams do a very good job in being dynamic and being able to navigate these difficult environments over the last couple of years. That sets us up for potentially kind of a positive earnings revision cycle if kind of things kind of play out in a way where we can kind of muddle through, right, and kind of work through some of the inventory builds and things of that nature, and then kind of heading into 2026, which is almost around the corner.
I know, the first half coming to a close here in just about 5 or 6 weeks, Michael. Indeed, always good to get your take. Thank you so much.
Thanks for having me.